Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today's video has a slightly different tone to it. Still a good tone, but I think it's a message that especially younger investors or newer investors might need to hear concerning the stock market and concerning recent events in the stock market. Other than that, I have just a few stocks that I'd like to make mentions of as I watch them in my portfolio today, moving around. I think it was just interesting activity. So I'd like to share that with you, share those stocks with you, and also just give some general advice going forward about what I see happening in the stock market and what I expect to happen going forward. So I'm excited to share what I got for you. Let's get ready to rock. All right, welcome back. I would like to invite you guys over to my Patreon if you haven't already joined it. We're a growing community. We're really ramping up our numbers. It's nice to see people come over and join our Discord, the private Discord that we have over there, where we talk stocks throughout the day, especially when that pre-market and that trading day hits. Man, we're really excited. And it's nice to see people talking so excitedly about the red days and about the buying opportunities that they might happen to find on those days, and then the successes that they get to celebrate on days when there's a lot of green going on in the market. So come on over to the Patreon. That link is down in the description. Check it out, and I hope to see you over there. If you're looking for a trading platform, I'd like to suggest Webull. If you sign up and deposit $100, you get 4 free stocks. Those 4 stocks can total anywhere from $21 up to $3,700. Either way, it's free money. I signed up, I got my 4 free stocks at one point in time, and now I'd like to pass it on. It also supports this channel because by using the referral link that's down in the description, I also get 2 free stocks that help me to get some better equipment. I have another setup coming up soon where I lose this background that I have back here and I gain a much more aesthetically pleasing background to go along with it. So I'm excited about that. Again, that link for Webull is down in the description as well. Finally, subscribe, hit the notification bell, hit the like button, share it with your friends. Let's get on to the stocks. So before I start talking about the stocks, instead I'd like to talk about generally the stock market itself and the recent events. Some of the conflict that we're having is based around expectation. Expectation is something that in relationships between people, it can be the cause of conflict whenever there's unmet expectations. And the stock market is driven by people, and there's a lot of expectations for those people for the stock market to behave in certain ways. So when that stock market behaves in ways that we don't expect, a lot of times it causes feelings of angst or anger, and it can really turn us into emotional traders, and we really don't want to be emotional traders in that way. We would like to think cool, calm, collected, and make informed decisions before entering a trade. And the reason that I bring it up is that there's a lot of traders that are asking me questions about buying into GameStop when it's up, around $400 a share, and they're so afraid of missing that burst, and they're dreaming about just how high that amount can go, just how far will the short squeeze go. So these new traders are going into these trades, they're seeing these big, huge gains pop up, and they're trying to trade on the expectation that it's just going to keep going, and so they want a FOMO trade, and they're just getting caught up in it. Regardless of what happens, when you have such a polarizing experience like it is, it's natural for people to want to take sides, and we absolutely love fault and blame when things don't go our way. And that was a big topic in the Discord today. There was a lot of conversation over, what's taking place, what it's doing to the stock market. And when it comes down to it, the whole reason why we're in the stock market in the first place is because we're trying to make money to secure our futures, that we're reaching for financial freedom. So what we need to do is we need to make a game plan that works, and when that game changes, we need to be able to adapt our game plan. Getting back to expectation, it was expected by some people, by short sellers, for GameStop to be a dying business, and so really the hedge funds, as far as I understand it, getting in and really elevating that short interest that it had, really depressing the stock price, and then figuring out that if we had a big enough movement for a short squeeze to inflate that price and cause them to have to buy the stock and really cause that inflation to keep driving, it really caused a lot of hard feelings within the stock market. This isn't a feelings game. This is a game where we're looking for evidence for the trades that we're making, that we're trying to make informed decisions. And if you're fortunate enough to be on the gain side of the trade, excellent. And if you're not fortunate enough to be on the gain side of the trade, you know, that's where risk management comes in. And whatever expectation you set, you want to make sure that you're always setting yourself up to expect the worst with your money, because that goes into good risk management. In other words, things like why shouldn't I trade this? In other words, why should I stay out of this trade in the first place? For GameStop, I can tell you it was even tempting for me watching it go from around the $70 mark and then up from there. And I was wondering, man, how high could this thing go? It would be awesome to be in it and enjoy the ride up. And then some of the other stocks that are out of there, I think NAKD was also another one that was really moving. Nokia is actually one that I already had a position in, and I happened to just be part of some of that ride up. So moving on to specific stocks, because I talked long enough about the expectation thing. This one is related. American Airlines is also something that I, up until today, held in my portfolio, and I had it around $14 a share, somewhere between $14 and $15 a share. And I logged into my trading account and I took a look and saw $30 and I thought maybe I was half asleep in that I was looking at it wrong. It turns out in the pre-market, it really did hit $30, and that I was up over 100% on it. And I quickly went to see what was taking place, and I saw that their earnings were better than expected. And I was like, wow, that's great. But their earnings weren't great enough to merit that sort of jump from, I think it was at like $15 or $16 a share at the time before that news came out from the previous trading day, to merit, you know, a 100% jump. So as I looked around, figured out what was going on, you did talk to some of the people that are in the private Discord. You know, one person said it so well. They're like, you know, that is really good news for their earnings, but it's not $30 good, was the way that they phrased it. And I thought that that was a really nice perspective, and I completely agreed with them. It was good, but it wasn't $30 good. So around the time that it was $22, I was like, it's not even $22 good. Like, I would love them to get back to that point. And I think as we get out of the pandemic and as we have those widespread vaccines and people feel safer traveling, I think American Airlines has a really good shot of recovering and restoring their stock price to wherever it once was. I timed it a little bit early compared to when the pop was actually going to happen, because it still hasn't happened. I thought when the vaccine started that it would have a bigger pop earlier on, and I was just waiting for it. Today for earnings happened to be that day, and you know, it was different than what I expected, in this case in a good way. I exited my position at about $22, and you know, there are other people that held on because they were hoping that it was the next GameStop, because they knew that it wasn't $30 good. And so they were like, wow, how high can this thing go? For me, I took the safe bet on this one. I was already up over 50% in a short amount of time for something that if I would like to take another position, and I would like to take another position. I don't know if it'll be with American Airlines. I really like Delta, and I like Southwest. Those are other ones that I am also considering. But when I take another position, it may or may not be with American Airlines. All right, so what we're looking at is American Airlines on the daily chart, and you can see they opened at $20.33. They were much higher in the pre-market. I'll get to that in a moment. It had a high of $21.77, and then also a low of $16.82. So this stock was really all over the place today, and I think people were really trying to make sense of what was taking place with the stock. For me, rather than trying to spend a lot of time making sense of it, I took advantage of it when it was advantageous for me, and that today worked out. Looking real quickly, intraday, you can see around the time the news came out, we had just a huge run up to $30, and I swear I looked at it during this green bar, somewhere between the 7:30 and the 8 o'clock hour, and then you can see this double top that it had, that it just started ripping back down. And when I saw that happening, I had a few things to take care of in the morning, so I didn't have this timed exactly right. Even so, I don't know that I would have been close to the $30 mark, but when I looked and saw that it was around 22-ish, I was like, well, I think it's time for me to get out, because I think that this is just going to keep falling. And today I was right. I took the sure thing rather than gamble that it was going to go higher, and today it worked for me. So coming out at a closing price of $18.89, that's a good price. They had earnings that were better than expected, and when when you have financials that are better than expected, well, then we get that surprise. And, that's a positive thing about expectations not being met, because here they're in a positive way. So we have elevated feelings of elation, and then we get pops like what we see here versus expectation that's not met. And so we get depressed feelings rather, and then we also see that happen within the prices that we have. So let's take a quick look at Nokia, because this is one that I feel that I didn't trade as well as I could have. So Nokia, I got in somewhere just around $5. I think it was actually about $5.11, and that was a lot of price action for Nokia at the time. And I was thinking about the way GameStop was behaving, and knowing that this was a name that was on the list, I was like, I'll let it ride. I'll see where it goes. And I watched it come up over $6 a share, almost $7 a share was what I was watching it at. And yeah, I saw that pop at $8.84. But that was also a lockout timer when it tripped the breaker and we couldn't trade it anyway. And then when we were able to trade it again, it was right back down. So there was not a lot of trading volume at that price. I don't believe you can double check me on it by looking at some of the information on the back end of the stock. But I held on to it, and I wanted to just say, hey, it's a small position. I'll hold on. I'll see where it goes. And well, here's today. Look where it went. It's down to $4.87. Instead of taking the sure thing, I let it go. And there are trade-offs by taking the sure thing. By taking the sure thing, you do limit your upside, but you have an upside. Here, by letting it ride, I missed that guaranteed upside, and now I'm on the red side of this. I still like them as a company. I really think that they're going to surprise us as a 5G company. I like that they're the underdogs, and it's one that with my small position, I'm rooting for the underdogs in this case. All right, so that's what I have for you today. I know that I went on a little bit, but expectation is really something important to pay attention to, especially in your own trading. What is it that you expect to happen? In my opinion, expect the worst, hope for the best. It's something that I use every day of my life, and I use it when I trade. Trading based on that expectation and hope, and finding that balance between the two. Yeah, I hoped that Nokia would go higher. The expectation was it was too soon for Nokia to go up as much as they did, that it was going to come back down. It was a matter of when it came back down, and it came down much sooner than I expected. American Airlines, it was up to 30, and again, I had that same feeling, maybe this is another one of those cases like GameStop, because everybody's watching because they want to be in early on that, and I'm just not immune. I might be a little bit more resistant than other people, still not immune to it. I owned American Airlines before time when I watched it take way too big of a jump. I thought, you know what, this is too big, but it's kind of a crazy time right now with some of the other stocks, so maybe this is one of those crazy moments. So I was trying to read on the back end of that to find out where exactly the truth lied with that price action and what I could expect to come up next. I hope to be financially free someday. Trading on that hope isn't always the best thing. Instead, expecting the worst really does help out, because I sold American Airlines expecting that it was going to come back down. By expecting the worst, I protected the downside. For Nokia, I went more on the hoping for the best, and instead of trying to expect the worst, I ended up getting burned on that one. So you guys find wherever it is that you fall in that, and really think about the nature of expectation and the conflicts that it causes in relationships, and it also echoes in the stock market as well, because after all, it's traded by people, so that psychology is a very strong element that you'll see in trading. I mean, there's tons of books on psychology and trading. I highly recommend going and checking one out and seeing what you think of it, and you might find some insights that really help you become a more informed trader. So to close here, Patreon, the link is down in the description. I'd love to see you over there. Join our private Discord, talk stocks, talk perspective. I would love to learn more about you as a trader, and I hope that you, from the people who are over there in the Discord, that you learn more about stocks that are moving and stock trading in general, or maybe you just have a ton of information and advice to offer as well. We always love perspective over there. It's about education, and it's about reaching that level of financial freedom. Again, that link is down in the description. Webull, also down in the description. Sign up, deposit your $100, get your 4 free stocks, help out the channel. I really appreciate it. I'll keep trying to bring you the best information that I can. Finally, subscribe, hit the notification bell, hit the like button, share it with your friends. Remember, this video is for entertainment purposes only. Always do your research and your due diligence. Contact a financial professional before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.